I'm Max Keiser. This is the Keiser Report here with Stacy Herbert for our annual Summer Solutions, where we look at the solutions instead of the problems. Today, we're talking to Simon Dixon of Bank to the Future. He's been around since almost the beginning. He's got a wealth of knowledge. Stacy.
We want to talk to you about the solution for diamond hands, as it's called in Bitcoin. The last episode of Summer Solutions, Max and I discussed Bitcoin fixes everything, essentially, especially with the monetary system, the banking system, central banks, all that sort of stuff. But once you have your Bitcoin, the having in the diamond hands, holding on to it, not having spinach hands, panic selling during this correction, and this could be the first correction for many people new to the Bitcoin space. So this 50% crash, is this normal? Is this something to be expected? What should people do? Discuss the strategy, the solution to spinach hands, to panic selling, to FOMOing in.
The first thing to appreciate is that Bitcoin's been in a 12-year bull market since its inception, and there's been lots of crashes and corrections and all sorts of things in between. But the longer trend is 12-year bull market. So once you appreciate that, but people join at different phases. And at every phase, people have always come in when they're new to this with a fear that they've bought the top. They were the last idiot that bought the top. Everybody is getting out and that they bought it. This inner fear really haunts the person that hasn't really developed the diamond hands yet. So really, it's a game of both psychology and strategy. So I could share with you what the strategy we've adopted in order to get through all these bull markets, but unless you get the psychology right, you just won't be able to implement. And the psychology is that when we're in the bull market, you're in Bitcoin thinking. And Bitcoin thinking is about understanding the supply and demand dynamics of Bitcoin. Bitcoin thinking is, it's 21 million. There's never going to be any more. It's that people can own their own money. It's people can spend their own money. It's that everybody needs Bitcoin to combat this melting ice cube and combat inflation, and everything's good and the price is going up and you're seeing your paper wealth increase. You start planning this wealth effect. You start feeling more intelligent than everybody that was telling you it's a scam, it's a Ponzi scheme. It's a currency just for drug dealers. Your Tesla needs it. You're thinking JP Morgan needs it. Apple needs it. Microsoft needs it. And the whole world. And you're on cloud nine. But once it hits into the bear market and we get these corrections, your inner reptilian fiat thinking comes out. And in fiat thinking, it's all about taking on more debt in order to drive more consumption. In Bitcoin thinking, it's all about savings in order to drive a wealth effect so that you can then become an investor with your newly found wealth. In fiat thinking, it's all about scarcity. It's about knowing that your money's going down in value. And then you start thinking in terms of converting your Bitcoin to fiat so that you can preserve the mental wealth and paper wealth. And you start thinking that Peter Schiff was right. You're the last idiot that bought it. But the only way to combat that is to look back, take out the chart, understand that we're in a 12-year bull market, and we get these corrections, which are mainly created by the 10% of insiders that is trying to take the 90% of traders that were in trying to just get in for a get-rich-quick scheme and take their Bitcoin so they can accumulate them.
Max, Stacy, and Simon Dixon were all together at the first Bitcoin conference in Prague back in 2011. We've seen 15 of these kind of pullbacks since then. And every single rally has a big name, and every single drawdown has a big name. They undergo what I call Bitcoin derangement syndrome. We had a big rally coming in on Michael Saylor's purchase over their MicroStrategy. And now on the pullback, the Peter Schiff has been replaced by a new high-profile naysayer, and that would be Nassim Taleb, who also seems to be delving into Bitcoin derangement syndrome. I think you're the one who pointed out that as the Bitcoin price goes higher, we attract a higher class of Bitcoin deranged people. So clearly Nassim is a higher class than Peter Schiff. He's got more books out there. He's considered to be more of a serious person. But now he's gone crazy. He's fallen into the trap. What is it about some people that not only do they fear the pullback, but they actually go insane, like Nassim Taleb?
They're just scared of the fact that they maybe not had full conviction They didn't believe that it could go up further. They don't fully believe in the supply-demand economics until they've been through it. And so they look to other people. They look to other experts, and somebody that's actually driving forward electricity, talking about the inefficiency of Bitcoin seems like a very credible argument and a reason to actually think, well, this time it's different. Bitcoin's no longer in that 12-year bull market. It doesn't reach higher highs again. And it's that this time it's different thinking is really what's driving people, and that inner fear of everyone around them, because we're doing this thing that was so impossible to achieve. The thought of creating a financial system outside of the financial system, the thought of actually being able to create something that combats this unfixable financial system, it brings in that inner fear that it was crazy all along and it was never going to happen. But Bitcoin time and time again punishes the people that do that, as they end up giving those Bitcoins to those with the diamond hands in the end.
So you just said that we have an unfixable monetary system at the moment and a banking system. Let's address that. And also, when you're talking about this correction, Bitcoin has often been compared to the internet, the early internet. And TCP/IP was always there. Then www was built on top of it. People could use Netscape browsers, surf the web. And we had the .com 1.0 boom. Then now we have .com 2.0. And finally, it took like 20 years, right, to get to the all-time high. Are we having the same sort of growth as the internet? And is this a new paradigm like the internet was, in terms of all your models are broken?
We can compare Bitcoin in terms of just purely looking at the charts to something like Amazon if you want. Amazon has 90% market corrections, but Amazon's a stock that nobody should have sold. Just like Bitcoin is the financial hedge that nobody should be selling unless you haven't done a few things. And one of those is many people, because Bitcoin is also a unit of account and medium of exchange, if it chooses to be, because you can spend it, people actually don't make that separation between their spending money and their savings. So when you're thinking about your spending money, you're thinking about what they can buy. And so volatility is really bad when your goods are priced in something, your mortgage is priced in one currency, and you're trying to buy it with another currency, and you see that deplete away. So one of the first things to learn there is the separation. You wouldn't use your Amazon stock in order to make purchases, but with Bitcoin you can. So it's a very unique asset class in that sense. And so therefore you have to use slightly different strategies. But yeah, Bitcoin being a protocol and a hedge against a monetary system that actually I talk about unfixable, but there is a solution to the existing financial system, and that's a slow removal from capitalism to socialism to communism, and using central bank digital currencies as the mechanism to roll over all this over-leveraged, rehypothecated Ponzi scheme scams in order to try and keep the system alive a bit longer. But the solution means the removal of all your privacies, rights, and freedoms, which also drives the use case of Bitcoin, because it just happens that the financial system that exists outside the financial system is also the same system that gives you back some of those rights, takes away censorship of financial transactions, gives you the ability to own, and gives you a counter system to this central bank digital currencies and fiat that ever growing in supply.
You bring up the central bank digital currencies, and you put it in the political context of a transition away from a free market capitalism toward a more socialistic or communist type model, which of course would mean centralization. And the powers that be are panicking into a centralized banking system, even more so, using central bank digital currencies. I think you were one of the very first to talk about this. And then you mentioned, and this is now happening, how the banks will get bypassed. And these digital currencies from the central banks will be handed out directly in the form, you could call it IMF or universal basic income. But essentially, you're describing this not as a savior, but as essentially a slippery, I guess you could call it the road to serfdom. As the book indicates, this is the road to serfdom, Simon.
Central bank digital currencies are the mechanism for fixing the financial system by taking out, with fractional reserve banking, which is as people learn their education about money, they start to realize that banks create money and it's all backed by debt. And approximately 97% of the money supply is a digital currency, which is a digital representation of the cash and coins created by the government, dollars or euros or pounds. And central bank digital currencies is a mechanism for removing banks from money creation. So at the moment, when you take out a loan, a new digital currency or new units of that digital currency is created by some digital dollar deposits in your bank account, and it's backed by debt. But because the debt is so now over leveraged, the solution to that is a movement towards centralization, where you can let the bank go bust, but you just issue the digital currency directly from the central bank, and you allow financial technology companies and banks to build on top of these central bank digital currencies. While it is a deleveraging and it is a solution, it comes with the removal of free market capitalism, comes with the removal of all those things that a currency that's at least one step removed from governments being created. And it moves us towards an algorithmic, artificial intelligence-led, completely centralized central bank digital currency that is used to enforce government agendas, fiscal agendas. If you're not spending your money in the correct way, then there'll be, algorithmic penalties on that. It will be automated tax collection. It will be multiple governments that are all looking to get their piece of digital transactions occurring in multiple jurisdictions. It will be connecting your passport to your central bank digital currency. The gateway drug is free money, helicopter money, universal basic income. Replacing your deposits at a bank when a bank is going insolvent or bust. And you will have to opt in to the removal of your rights. It will be connected to your passport. If you haven't got the right things, then this is where money is going. This is the ultimate goal. This is the war on cash. This is the removal of banks from money creation. This is the ultimate form of centralization and control through central bank digital currencies.
Wow, that's a mouthful, hot and heavy. We got to take a break and cool down. We'll be right back with Simon Dixon from Bank to the Future on Summer Solutions with Max and Stacy. Don't go away. Welcome back to the Keiser Report. I'm Max Keiser with Stacy Herbert. We're talking to Simon Dixon at Bank to the Future, talking about how not to get shaken out of these pullbacks in Bitcoin. 200,000 coins were shaken out of some of the newbies and are in the pockets and the wallets of the long-term holders. And this always happens at these inflection points. But Simon, you talked about the psychology. Let's talk about strategy. How should people approach this?
Having been through all of these different markets, having been through the $30 to $3 crash, the $1,250 to $250 crash, the $20,000 to $3,000 crash, and now the $65,000 to $30,000 or wherever it go next crash. I've noticed that you can normalize and try and, if you can get the psychology right, as I said, you won't get the strategy right if you haven't got the psychology right, because you'll just be shaken out and you'll listen to all the people that were telling you that you were an idiot all along for buying Bitcoin. But there's ways you can normalize those returns. One is just a simple dollar cost averaging. When you're dollar cost averaging, if the market's always going up, then you are always buying at higher prices, which is good for your paper wealth, but it's bad strategy because then you should have just gone for a lump sum. So if you're dollar cost averaging and you're just simply buying every month, then bear markets are a great thing. You want the market to go down, you want those corrections, and you want to be one of those people that's accumulating out of the people that haven't got the diamond hand. So dollar cost averaging is one strategy. Another strategy is longer term, high risk, high return investing. So the companies that make all the money during these bear markets are crypto exchanges. So the Bitcoin exchanges, if you are a shareholder in Bitcoin exchanges, You can't sell those based upon the whims because of the liquidity. You have to be a long-term holder. But owning equity in exchanges means you can just not do all of the crazy thing that everybody does, because the exchanges make all the money, whatever's happening in crypto, whether it's the latest crazy trend in DeFi or NFTs or whatever it is. Rather than you messing with all that stuff, leave it to the exchanges, become a shareholder in the exchanges, and then you can just benefit when the market's crashing. They make the most amount of money when markets are crashing, and when markets are doing well. It's sideways markets where they don't do so well. And the third is taking a sum of your Bitcoin and getting yield, which you can get. It's not something that you should do with all your Bitcoin, because the ability to own your own Bitcoin is a fundamental principle. But one strategy I've used is having a bit of stable coin loans, because you can get above even the manipulated CPI interest rates that you get in the traditional fiat world. So having a small percentage, putting it in stable coin loans and taking advantage of some of the yields that you can get from people looking to buy those Bitcoins. And then you make all the money at the expense of all the traders, the 90% of people that are losing money to the 10% of insiders. So when you can normalize a bit more, it's really great when these bear markets come. You get very excited about them. And as long as you remember that you're in that 12-year bull market with corrections, can't obviously give financial advice. The past does not equal the future. But these are some strategies that have helped me get through some of these rides and bear markets and crashes.
You mentioned CPI, you mentioned strategies. What do you think the strategy is behind the Biden administration or any of these governments printing trillions of dollars? It's beyond just what the QE was from 2008 to 2021. We had quantitative easing for years. That was about, printing credit. This is actual cash, stimulus being created, airdropped into people's pocketbooks, into their balance sheets at their bank. We see the CPI numbers, even as you mentioned, the manipulated one, soaring all over the world. Like, what is the strategy here? Why is there a $6 trillion budget, the biggest since World War II, despite stock markets at all-time highs, despite US incomes at all-time highs? Like, what is going on?
Yeah, these are debt cycles. We're, I think you said we're celebrating 50 years of the dollar, the fiat dollar. And these most fiat currencies, I know the Great British Pounds lasted about 300 years, but most of them on average are about 27 years. We're 50 years into the US dollar fiat standard. And the level of globalization and dominance of dollars. So, approximately 70% of all reserves are held in dollars globally, and it accounts for 50% of transactions, because gold and oil and certain asset classes are priced in dollars. Biden is just trying to keep hold of and recycle more of what they do. And the way to do that, as we've alluded to, is you accept that free market capitalism is no longer an American ideal. It's no longer part of the dollar. It's about having a larger and larger government with more interference, issuing currencies direct from central banks or governments, the merging of Treasury and the Federal Reserve, and making sure that they keep hold of the US dollar and its importance by giving up on the experiment of free markets. And so that's where I think it all goes. Now, this bogey called inflation comes along. What would they typically do? Well, they would put up interest rates. They would look for deflation. But we're now in a government, including the Trump administration, that just will no longer accept that stock markets are no longer allowed to crash. Real estate markets are not allowed to correct themselves. Real estate's not allowed to be affordable. So the irony of the Biden administration is that the Democratic principle of trying to create, a more equitable, society through larger and larger governments, is that it's actually ending up driving a rich-poor divide, where the rich get richer and the poor get poorer, You get poor that are more and more dependent upon debt. You get assets that are not allowed to crash, and therefore the rich people are getting wealthier and wealthier with those assets. But the trade-off that the wealthy need to accept is that it's the removal of capitalism. It's a slow, gradual movement to a larger government, a larger, more centrally planned, more socialism, and the poor that are completely dependent upon debt slavery, demanding governments to do more, demanding universal basic income. Why? Because they feel completely shafted by the system. They don't understand why they're on the wrong side of these debt cycles. It feels just like a macro trend. It feels like their government's let them down. So they just want a larger and larger government. So the people are demanding it. And that is where we're shifting to. And it's all a symptom of this fiat-based, debt-based monetary system, and the counterculture is an equity-based system that rewards savers, which is Bitcoin, a fixed supply, people trying to actually drive genuine wealth effect, being rewarded for saving, and it's all because if your money goes down in value, the longer you hold it, then you're not going to hold it very long and you're going to be driven to debt.
Bitcoin is the counterculture. Back in the 60s when we had the last major counterculture, people were burning their draft cards, and now people are burning fiat money in revolt against what they see as an oppressive regime. Looking around the world, Simon, it's a different story in different countries. So India, which is a country we were instrumental in bringing Bitcoin to many years ago, they've been off again, on again. Looks like they're on again with Bitcoin. China tries to ban Bitcoin, but it's impossible. Nigeria is becoming hyper-Bitcoinization. Ethiopia is becoming almost hyper-Bitcoinization. Bitcoin is global. Where do you see, from where you sit, some of the trends globally with Bitcoin?
Yeah, the whole India-China thing has been, a back and forth, a back and forth, a back and forth. But really, it's just recycling the same news. So, we saw that recently with the China ban was just essentially a reiteration that ICOs should be avoided. And that leads into, certain officials from the government reiterating certain things. I've also been following the Indus story for a very long time because, the Unocoin team were instrumental in getting the central bank in India to actually accept that they won the case against the Central Bank of India that was trying to suppress it. But these large populations of two very important populations in terms of the global sphere. There's been a back and forth all along, but it's just recycling of the same news. So the interesting thing is the punishment that Bitcoin gives to the countries that do this. So when China, implemented an exchange ban, they were trying to push the blockchain agenda. It's kind of like the banks when they were trying to make Bitcoin go away. After laughing at it, they just tried to popularize the whole blockchain good, Bitcoin bad. And still today, I think it was just announced that Microsoft has just shut down their blockchain division. They're no longer supporting the banks after extracting a load of money in order to support their blockchain good, Bitcoin bad agenda. And the financial system's just adapting to Bitcoin, and they're creating Bitcoin friendly banks, and all sorts of stuff is gradually happening there. So just like with the banks, it also punishes countries. So I envisage a game of chicken where I've always been advising governments to allocate some of their electricity towards mining Bitcoin as an hedge, so that when the time is right, they can announce that they're also holding it as part of their reserve assets, so that they can benefit from the effect that will actually happen. Now, it just so happens that many of the sanctioned countries are starting to look at those strategies right now, because it really has just been the countries that have the most need for it are the ones that are adopting at the fastest rate, which are the ones that are suffering, the bad currency regimes, bad, censorship and all sorts of stuff. But central banks need to adopt it. Governments need to adopt it. And when you ban it, we've already seen all of the data, all of what they want ended up going to Korea, ended up going to Japan, ended up going to Singapore. So it has this really effect of punishing the countries that don't adopt. And I think we're hitting such a regime, you know, where out of this health pandemic, many countries took on ginormous World Bank loans in order to fix their infrastructure. Those loans were tied towards having to spend that money and healthcare infrastructure, you know, dollar loans in foreign currencies, and having to re-spend it into America on vaccines and all sorts of stuff. So these currencies are suffering, and these countries are really suffering under these many of these World Bank loans. And so they need to hedge. They need to hold some Bitcoin. They need to do what's right for individuals, is right for governments, is right for central banks. And so, you know, this is something that they really need to consider. The earlier they consider that, the more likely they are to be on the right side of one of the biggest shifts in financial history that is unwinding right before our eyes today.
From Simon Dixon, co-founder, CEO of Bank to the Future, from his perch, surveying the globe, getting the Bitcoin standard implemented everywhere. And that's the solution. Simon, thanks so much for being on Keiser Report.
Okay, thanks for having me again.
All right, and that's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacy Herbert, and our special summer solution. Until next time, bye, y'all.